So continuing with the previous one, about the materials management processes, it starts with the purchase requisition. So whoever actually is in need of some materials within the business, for example, actually comes up with his need, and that need is actually documented into purchasing requisition, right? So this is actually the need statement of need. Now, who raises purchase requisition? Usually, right, there can be two environments. Sometimes there are inventoryable goods, right? So inventoryable goods, right? So maybe the spelling is not correct and the writing is also not very good. And sometimes there are non-inventoryable goods. So if the goods are inventoryable goods, right, then the end user, maybe the user in the finance department or admin department, needs some materials, right, or the people in the production department need material for the production. If this is the inventoryable goods, then they actually go to the stores department and they ask the stores department to provide the material, right? So this is the need statement, is not usually known as purchase requisition. In that sense, it is normally known as SR store requisition or MR material requisitions, right? But if there is some non-inventoryable goods, right, then actually the user department cannot go to stores to ask for the inventory, right? They have to raise the request directly to purchase department. So then they actually raise the purchase requisition, which is raised from the user and it raised to the purchasing organization. So this is the first scenario. The second scenario is that sometimes in the inventoryable goods, if the inventory of the goods is lower than the required level in the stores or the warehouse, then the stores people actually come up with a need statement. They actually raise a purchase requisition saying to the purchase department that, okay, the stock has fallen down, so we need to purchase such and such amount of those goods. So in that case, actually the stores or the warehouse shall raise their concern or their request to the purchasing department, purchasing organization, in SAP terms. Stores, right? So then once the purchasing requisition is there, then it goes to the purchase department. Purchase department then has to select the vendor. To select a vendor can be very, it can be a very complicated process. We shall see in the next slides, or it can be a very simple process. Then once the vendor is selected, they raise the purchase order, which is an offer. Legally, it's an offer to the vendor, so that when the vendor accepts the purchase order, is actually a binding document between these two. Then actually we notify the purchase order to a vendor by some means, maybe by physical copy or maybe by electronic data transfer. Then the vendor actually shipped the goods. This is something which takes place at the vendor part. On the vendor part, when the goods come to us, we receive the goods, right? So this is taken care of by the stores people, right? So here is up to this point is the purchase people, right? Up to this point is the vendor. Maybe this is also part of purchase people, and then this is the stores people. Then the vendor sends the invoice, which is received by again the purchase people usually, and then actually we pay to the vendor, which is the domain of the finance or the accounting people. So don't worry about the complicated comments on this presentation, because we are going to discuss each and every of them in a separate slide in this presentation. So purchase requisition is an internal document, right? It doesn't go to vendor, instructing the purchase department to request a specific good or service for a separate time. And who raises it, right? As we discussed, it can be the end user or it can be stores, depending on the inventoryable or non-inventoryable goods. It can be created manually, right? Or it can be created automatically in case of inventoryable goods, right? In case the goods are inventoried, right, it can be created automatically, or even sometimes in case of non-inventoryable goods. For example, in case of MRP, we shall see in the production planning module when we will run the MRP. The MRP is actually the plan, what to purchase, in which quantities to purchase, and when to purchase. So it actually say what, when, and how much. So if we know when and if we know how much, the system can automatically create a purchase requisition at a certain point of time when it sees that the plan says that in March, for example, 200 units of bike frames are to be purchased. The system can raise the purchase requisition automatically without any human intervention. It can be created automatically with respect to the production orders. So production orders actually a written instruction, is actually an official instruction to the shop floor people, the people who are executing the factory manufacturing processes to produce a certain amount of goods. So when we execute a production order, right, and we order the shop floor people to produce shop floor people to produce, right, the system automatically comes up with the list of all the raw materials, which is usually known as the BOM, bill of materials, right? So every finished good has a BOM as a bill of material. We should see the details of BOM in the production planning module. So system automatically knows that if 2 bikes are to be produced, 200 bikes are to be produced, for example, we need 200 frames and we need 400 wheels, for example. So system automatically then, if these are just things to be purchased, for example, the system automatically raises the purchase requisition for them when the production order is created. Similarly, when the maintenance order is created, so maintenance order means that if we are going to schedule maintenance of the factory, we need, for example, some cleaning materials, some chemicals, some supplies. So the system can automatically create the purchase requisition for them. And on the fourth, if we receive a sales order and we have configured the system, so remember the system needs to be configured in order to create the purchase requisition automatically in all these cases. So for example, when we receive a sales order and it's a make to order industry, for example, then as soon as we receive a sale order, the system comes to know that this is the amount of order, this is the amount of material, which is the quantity which is supposed to be delivered on such and such date, and the system can automatically then comes up with a purchase requisition to purchase those materials or the constituents or the components of those materials to get them manufactured by the certain date. So this automation is actually one of the very USPs, unique selling points of an ERP, that most of the things can be automated, and the errors and mistakes and delays due to human interventions can be can be actually avoided. And of course, with this automation, there are certain downsides as well. For example, lack of employment opportunities. We don't need to discuss because this is not our current topic. Then the requisition sourcing. So once the purchase department has the purchase, so this is taken care of by the purchasing organization, right? It means I am using the SAP term purchase department. So they have to assign to a source of supply. So the possible methods are internal sourcing requirements, source list, outline agreement, and RFQ. Let's see them individually. Internal sourcing is that if the goods are available with any other plant within the same company code, or maybe with any other company code, then you can simply ask the goods to call from that side rather than purchasing it from outside. So the second one is source list. So if you have a pre-qualified, in our local culture we used to say a pre-qualified list. So if you have a pre-qualified list of vendors, a pre-selected list of vendors which are actually compliant vendors to your actually requirements, then what you can do that if you receive a purchase organization and you simply go to the information record, you enter the material in the system will show you all the possible qualified approved vendors for that particular material, and you can simply order to any one of them. If it's a single, you can order to them. If there are several, right, so you can either send them the request for quotation, or you can simply choose any one of them. The third is the long-term contracts, which in SAP are known as outline agreements, right? So outline agreements are broadly of two types: the contracts and the scheduling agreements. Again, the two SAP proprietary terms, SAP terms in the SAP used in the SAP context. So these are the long-term sort of agreements. In the business world, we used to say the blanket agreements, right? So it can be scheduling agreements when actually you also mention the exact schedule of the delivery of goods, or it can be just a blanket agreement where you mention just a quantity and the value of the goods that you are supposed to get throughout the entire next year, for example. So in that case, you need to, as long as I remember, in that case you need to create purchase orders as well But in that case, since the schedule is perfect, schedule is given, so you don't need to create purchase orders individually for each and every transaction. So I don't exactly remember, but this is something which I think is so. So we can see it in detail. If somebody of you is interested, just email me and I will see and I will let you know. The request for quotation is eventually if you don't have any source list, you don't have any internal sourcing, you don't have any outline agreement, then the eventual thing is that you go to the request for quotation. If you want to create it officially, then you create an official request for quotation, you send it to all vendors, right? And the vendor actually submit their quotations. In SAP, quotation is also entered into SAP system in the same document, which is the RFQ. So RFQ is created and then RFQ is changed by entering these quotations. Then the system automatically do evaluations on the basis of their past history and the current quotations. And then you actually reject others and you select some of them and release the purchase order to them. So in SAP, the RFQ and the quotation will become a single document. So these are not two separate documents, whereas physically they are separate, but in SAP, you actually enter the quotation data into the main RFQ document. So one of the benefit of this system is that you have the historical entering the quotation into the system, that even if you don't buy from a vendor, for many times he is quoting you prices, you're actually maintaining the history, so that after a certain time you can actually see that how this vendor is quoting prices to you, even if you have no single record of purchasing from that particular vendor. So the evaluation criteria can be based on price, and it can be maximum of 99 main criteria and 20 sub criteria in each main, right? So some of these criteria are price, quality, delivery, and that depends on the industry and the materials which are supposed to be used. So some of the materials it's very important to take care of the quality. For some of them, the price is more important. For some others, for example, for rush orders, the delivery is also more important. And then we come up with the purchase order. Now, just like purchase requisition, a purchase order can be created automatically as well, right? So this is the automatically. So simply, it's the same scenario of a purchase requisition, but you allow the system, you configure the system so as to convert the purchase requisition automatically to a purchase order. What the if you actually see, if we see the difference between the purchase requisition and the purchase order, the main difference between the two is that the purchase order must have the name of the vendor, whereas the purchase requisition doesn't need to have necessarily the name of the vendor. It can have the name of a suggested vendor. So if we know of the vendor to whom we are supposed to order, then it's very easy to convert the purchase requisition into purchase order. And purchase order can be created with reference to a previous purchase order, so that if I reference it to a previous purchase order, for example, the vendor name, the goods name, the materials name will be automatically defaulted from that purchase order. So it's to minimize the data entry work. We can reference it to a purchase requisition. Eventually, if a purchase requisition, we have a source list so that a purchase requisition is to be converted into purchase order. Then we can just give the purchase requisition number so that all the details of the purchase requisition are automatically transferred to the purchase order screen. We don't need to enter them, so minimize the data entry. It can be created with reference to either an RFQ or a quotation, right? Again, the same thing, the quotation is there in the system, the RFQ is there in the system. You tell the system that you want to convert this quotation into purchase order, and the system will automatically copy the data, and it can be created outright without any reference. So a purchase order can be created outright afresh. Some of the details of the view of the purchasing data. This is the condition data. You can see this is the condition tab. So condition is all about the prices. So you can see it's the price and the discounts and all the related stuff. This is the place where we can enter the material number, so that the system, this is the price, purchase order quantity, this is the net price, and this is the data about the vendor. So the key information, this is the data about the organization units involved, which purchasing departments are ordering, which purchasing people are ordering, which company code we are actually going to purchase. Purchasing order can be there for the standard stock, it can be there for the services. So as we discussed, service can be created as a master data. We can have a service master, so we can create a purchase order just like we create a work order. We used to say a work order. So work order can be a purchase order in the SAP system. It can be subcontracting, so maybe we have received a sales order and a part of that service or a part of that we are outsourcing. It can be a third party and it can be consignment, right? So SAP has a wide variety and flexibility. So even the consignment goods, so by definition the consignment goods are not your own goods. So I have a showroom, for example, and I'm asking my a manufacturing company to place their goods on my showroom. So this is the sort of consignment arrangement. So if there are no materials, there are not no materials of that company, the materials are all sold, I can raise a purchase order, and then the company will send their materials that I will showcase in my showroom. Although those materials will not be my property, I will not own them, right? But I still have to enter them in the system as a materials, although the accounting point of view is not there, but physically the goods are there. So the system has a wide variety of catering for all the business needs. So a purchase order has the header, which is the entire purchase order related information. One purchase order must have only one vendor. It has the document number, terms of payment for the entire purchase order. Then for every single item we have these things, and for every single item we have different items. It means different materials, and for each material we have quantity, history, line item price, and delivery status. So we can see three different windows on the purchase order screen. We shall see the details when we do it hands-on. The output can be created, it can be printed, it can be emailed or exchanged in any other manner, right? And these are some of the other related documents. When we send the purchase order, then actually we also supposed to send a acknowledgement copy, so that the acknowledgement copy, signed copy electronically or in the physical form is received, and we can record it, because this is the proof that the vendor is going to supply the goods, and this is and we have to pay to the vendors. There can be reminders created for the system, right? So this is not that much important, I'm skipping it. When the goods actually arrive, we have to record the goods movement. So an important concept in SAP is the goods movement and goods movement key. So for every goods movement we have different goods movement keys. For example, goods can move from vendor to our premises, from one plant to another plant, from one department to another department. They can move from restricted stock to non-restricted stock. They can move from quality control to user stock, and etc, etc. So we have a variety of movement keys which cater for these needs. So while actually executing the GR, the goods receipt, we actually determine if we got what we ordered. So it has to map with the purchase order automatically, right? So GR is always usually referenced to a purchase order. So system can automatically propose the data from the purchase order. So we don't need to enter any data in GR except a couple of things, that how much quantity we have received, if it is different from the purchase order quantity. And then we also note that whether the goods are apparently okay or not. So there is a small checkbox, goods okay button, which is the first hand inspection, not the quality inspection, which actually confirms that okay, there are 3 cartons and each carton contains 20, for example, frames. So we have 60 frames and the 60 frame was the order, so we check mark this. And then purchase order history is updated with the receipt. So as soon as we receive the goods, the system updates the purchase order history so that we can see that how much is delivered and how much is remaining. Automatically physical inventory is updated, and automatically accounting is done for that inventory. So this is GR is the first point of accounting integration in the procurement cycle. First point of accounting integration, right? So which account to be debited and which account to be credited, we shall see later in the later slides further. So some of the goods movement keys example, we are not much concerned about them because we are not going into deep details of the materials management module, right? So sometimes there can be a blocked stock, right? So although we have received the goods, but the goods are not available for some reason or another for use. So we can still receive the goods with the block stock movement key, so that on one hand we record the receipt, but on the other hand we do not make it available for use. There are times when we have rejected the goods, right? But the goods are still there and they are not returned to vendor as such. So goods are at my premises, so I have to record them some way or another. and I have to mark them specifically so that everybody knows that these are the goods which are supposed to be returned to vendor. Some goods can be specific to sales order, right? Specific for a customer. So we can mark the goods that these goods are specific for a particular customer or for a particular sales order. And when we implement the system for the very first time, right, we use this initial entry stock movement key, usually as far as I understand. And destination for the receipt of goods can be warehouse, it can be quality control. It means the goods are in the quality inspection, they will go to warehouse eventually, and then they can be. So we are not going to discuss the details of these because this is deep inside concepts in the materials management module. So the effects of the GR are materials document is created. So a document is created in the materials management. It has a specific document number. An accounting document is created. So remember, the material document is actually GR, whereas the accounting document is actually in my local sense, which is a voucher number, right? It's a document number which actually evidences debits and credits. It's a different number, right? These two are linked, but they are different. Stock quantities are updated. Common sense, of course. Stock values are updated. Part of the accounting. Purchase order is updated. As we seen, purchase order history. Output can be generated, so we can generate the GR slips as well, electronically or physically. Then we receive the invoice from the vendor, and when we receive the invoice, actually the function of the after receiving the invoice before payment, we should compare the invoice with the purchase order and with the goods receipt, so that we can see that is the invoice same as what we ordered and is it reconciled with what we received. Then when the invoice is processing, the purchase order is updated, so we can see that for which of the items actually we have received the goods and also received the invoice as well, and for which of the items we have GR but we don't have invoice. So this is something automatically logged into the system. Material master is also updated by the last invoice price. So in the material master data, remember the invoice itself is not the master data. We are now actually discussing the transaction data processes. But in the material master data, the latest price is updated, latest purchase price is updated. Accounting document is also created with the invoice. We shall see in the next slide what the accounting entry is there. Then once it is verified, we say it invoice verification, because this is not our invoice. We don't create it, we verify it. It is passed on to the accounting. So then we post the outgoing payment to the vendor, right? So this is about the accounting functions in the elements of payment. So we actually show whether it's an online payment or payment by check, or it is for how much items, for how much of the invoice part we are paying. So we can pay for the entire invoice, or we can have part payments, and we can print the medium of payment as well. For example, the check register can be updated, and even the checks can be printed, and automatically a financial accounting document, a voucher or debits and credits are created. So now the last part is about the entries. Purchase requisition, no accounting entry. Purchase order, no accounting entry. These are just the commitments. This one is the commitment, right? And goods receipt has an accounting entry. When we debit the inventory, we should technically credit the vendor, the accounts payable part, but we don't, because we don't have received the invoice. So vendor cannot be affected unless we receive the invoice. So we create a temporary account, right, which is a temporary account, which is normally known as a suspense account in accounting. So this is a temporary account, right? Goods receipt, invoice receipt, GRIR account. We park the amount over here. When we receive the invoice, right, eventually we debit GRIR account, so it actually vanishes, it actually becomes zero, and we credit the vendor account. And when we actually pay, we debit the vendor account and we credit the bank. So the combined effect of this is that when we receive GR, right, inventory debit, GRIR account credit. Then when we receive invoice, right, I should have actually taken the same color, but it doesn't matter. We actually, on the invoice, we debit this account and we credit this account, right, the green ones, and the red ones in my color. And then when we eventually pay, so I should select I think green now. Actually this amount is debited, account payable is debited, and bank is credited. So the eventual effect is that the GRIR was a temporary account, it's out of the picture. Accounts payable was actually a subsidiary account, so we have paid them, so it's also cleared. And actually inventory is debited and bank is credited. This is the net effect. And that's all the details about the materials management module. Thank you very much. See you in the next slides, inshallah, in the next video.